So this is a strategy on the 3-minute chart. It's a quick scalping strategy. So here it goes. So we start right away with the 3-minute chart and we're looking for a bearish momentum. I want to see lower lows, lower highs, and I want the market to go to the downside. So we can add here the EMA cross between the 50 and 200 EMA, and I want to see the cross where the 200 EMA, here in my case the green line, stays above the 50 EMA, the white line. So I want the market to be below the 200 EMA. So now I'm sure that the market is bearish, at least for a short amount of time. Since this is a scalping strategy on the 3-minute chart, we don't want to take forever to take our trade. We want to get in quickly and get out quickly. This is why for now the bigger time frames are not so important. We go here with the flow on the 3-minute chart and take our trades from here. So if I form here a trend line, I can see that here roughly at this area we have a one touch. This could be considered a two touch or this one, but the trend line here is pretty close. Remember, a trend line is always an area. So if I take the inner line right around here, we here have 3 to 4 touches, which is enough for me to identify a trend line right around here. And here at the 3rd or 4th touch, I want to see a bearish candlestick breaking lower. So I want to see here a structure, or actually the last structure being broken with a bearish candlestick. And if we take a look right here, this is what happened with this candlestick. So now after the last structure here was formed at here the 3rd, 4th trendline touch, I want a big engulfing, fully engulfing closed candlestick breaking the structure right here like this one. So after this fully engulfing closed candlestick, I want another candlestick breaking to the downside. So I want another bearish candlestick, but this one here, I want to leave this kind of wick slightly open here, crossing above the previous low of this fully engulfing closed candlestick. So this is the type of wick that I want. This one doesn't have to be fully engulfing closed. In this case it is, which is even a more confirming sign for me that the market will go lower, but it doesn't have to be always. For me, more important is here this wick rather than the low at the bottom right here. The previous one has to be fully engulfed, but this one not so important. Here the important thing here is the wick. So now we add our RSI and our MACD, and here quickly take a look at the candlestick right here. So where we had this fully engulfing candlestick, we see the RSI is far below the 50 level areas, so the momentum is pretty bearish. So I can assume the market will go lower, so I'm looking for shorts. And here my MACD is below the 0 levels, and right here after this engulfing candlestick, we see here the market switched from white greenish to the red area, meaning now is the start of the red area. So here the market has a lot of space to go further to the downside. So now after I have confirmed this, here what I want the market to do, right at this candlestick here, I take this fully engulfing candlestick, I draw my resistance area right around here, and I want the market to come back twice, which means here this wick was kind of my 3rd touch. After this wick I want the market to come back twice and get rejected. So here is the 2nd time where the market gets rejected, and here the 3rd time, and here is where I want to enter. So here I see the market coming back here, 1 wick, 2 wicks, here the 3rd kind of touch of this resistance area. So here I want to enter right at the low of this huge wick which closed fully engulfing. My stop loss right at the top, slightly above, and my first target would here be the lowest point of this support area. So in this case this would give me here roughly 2.3 risk reward, so slightly better than a 1-to-2 risk reward ratio. But if we see the market continues to the downside with a bearish momentum, we can't let the market run, and then once the market turns around to the upside, this is where we want to exit. So here we add the MACD, and here once again I have this cross between the orange and blue line on the MACD right at this candlestick. So once this happens here right at this area, this is where I want to exit. So in this case my risk reward would be here at roughly 3.37 risk reward ratio. Again, first target always the previous support area. If the previous support area is pretty small, then at least a 1 to 2. If the market again continues to the downside with a pretty bearish momentum, then I take a look at the MACD and look for the cross to the upside. This is when I want to exit at least then. So here's another example of the same strategy. Right here we see this fully engulfing candlestick. On the left side, the RSI below the 50 levels, the MACD here in the red area below the 0 levels, and here the first candlestick fully engulfing closed at the bottom, and then the second candlestick right here formed a wick here the first time. So again, I want the market to come back here. This here was my first touch, and here I see this second wick, my third touch, and here now the fourth touch. So I want the market to come back 3 times, once, twice, 3 times right here, and then I want to go again for a short right around here at the bottom of the candlestick, stop loss slightly above my previous take profit here, the previous low right at this area. In this case it would have been a 1 to here 1.5 risk reward, not too bad. But again, if this happens, you can exit here, but you could also go for a 1 to 2 at least. So this would be right around here, and we see the market goes lower. So now if we just take a look at what the market does, the market continues, and here now I have my cross between the blue and orange line on the MACD. So right at this candlestick right here I would exit, so I would have here risk reward of 2.8. So here again the same exact trade. Here was the last structure, which was broken with this fully engulfing candlestick, and here we can see another red bearish candlestick formed right after the engulfing one, breaking the last structure. Here we see the bottom here wasn't fully closed, which again doesn't matter. I want here just this wick here, this one is what I'm looking out for. And now if we zoom in here a bit, so here I see the wick. I again take my resistance area right around here, and I want the market to come back again 3 times. So here was my first comeback, my second one, and here my third one. And again I want to enter right around here at the low of my engulfing candlestick, right here with my stop loss at the top of the candlestick. And my first target would here be the previous low right around here, and we can see within a couple of minutes we reached the risk reward of 3.5. and if we let the market run further, we can see here the MACD crossing to the upside right around here. So if this would have been your exit, then probably the risk reward would have been a 1 to 1. Not recommendable, but sometimes it happens, doesn't matter. The first target is mentioned is always the previous low, so here a risk reward of 3.3, 3.45, depends on your entry and exit. But this was the simply 3-minute trading strategy, which works even on bigger time frames and on every time frame. But on the 3-minute time frame, it's just the method that makes you money much quicker than the bigger time frames. So if you want to grow your small account much faster and get some money, so here is my strategy for today.